Welcome to the StockMentor.com studios here in the Black Hills of South Dakota. I'm your stock mentor, Brian Johnson. And we had a move down to start June. We had a move down in the markets today. Now, the markets did start lower to start the day. I suspected they would be about 5 points one way or the other from where we closed on Friday. I was a little bit off with that. We opened about 8 points lower. Now, we did have a short spurt in the morning. Looked like the Bulls were going to try to make a run at it, and then they absolutely fizzled. They just hit a brick wall. Bulls stopped buying, and what did we see? Once again, the Bears said, okay, and they came in and took over for the rest of the day, especially late in the afternoon. If you watched about the last, let's say half an hour to 45 minutes of trading, boy, the Bears just stuck it to the Bulls for that entire run down. Huge move to the downside. It was probably a good 10, 12 point move in just the last 20, 25 minutes of the day by the Bears. If the Bulls aren't going to take over, the Bears will. They're not afraid to step in right now. It's exactly, it's really the opposite of what we were watching not more than 6, 8 weeks ago, where the Bulls were running it up, and the Bears would start something, and then they'd kind of give up. And the Bulls would go, okay, and they'd take over, keep running it up, keep running it up. Now we're seeing exactly the opposite happen. The Bulls just, there's no fire in them whatsoever. We talked about that kind of over the weekend. Here you can see this level that we were watching back in here get broken. Got to push above it, but it didn't hold. Nothing. Now we're back to test the top side of this blue line. Even closed down here today. We did manage to close above the 10,000 mark by about 25 points on the Dow. But overall, it was quite a sweeping a move by the Bears, with the markets finishing in the Dow, as strange as this is, being the strongest, only finishing down about 1%. S&P was the weakest at 1.72, and the Nasdaq at 1.5% down today. So you can still see nothing from the bull side here. Got to remain neutral to bearish in this move. There's still nothing in here that tells me to get super bullish on this market, but there's nothing that tells me to swing trade this thing one way or the other either. If you are a day trader, it's been some pretty good trading, and today was no exception. You had to sit around and wait a little while for it to really start to materialize, but boy, that last hour of trading was a lot of fun. And you can see where we finished today, right back above the 10,000 area, and still not able to get above this 200-day moving average. This is still going to be a major thorn in the side of the Bulls now that they're underneath of it. Just can't seem to find their footing here. Any break back below this 9,900-ish area, guys, could be pretty bad for the Bulls. Nasdaq on a 60-minute here, you can see it coming right up, and this was actually a pretty nice looking chart today if you followed it at all. And that came up and just about touched this 1880-ish area within 2 points. That's pretty good for me. But this blue line held today and pushed price away. Once again, end of the day, Bulls decided we're not ready yet, so the Bears took over, drug it right back down to finish right below the 20 and above the 50-period moving averages. If we take a look on a daily, though, you can see what we've done. We still really nowhere on any of the indices overall in the bigger picture. That is lots of chop, lots of sideways action here. The 200-day moving average on the Nasdaq is still holding as it has for quite a while. So we'll wait and see how it handles the 200 if and when it gets back down there. Once again, all this swing trading stuff's very difficult if you're a swing trader. Just a lot of chop right here. Here's the weekly. It's Tuesday. We've still got a few days left. We'll talk more about this on Thursday. SPX on a 60-minute. Look at the big fall it took today. This shows the weakness in the S&P today. And let me take a quick look at the sectors, and energy got absolutely crushed today, down 3.6%, followed by capital goods and then basic materials. So I was curious to see how the financials did, but they were only down 1.5%, so only. But at least they weren't leading the charge. But you can see here, once we got below this 50-period moving average, the selling really started to pour in pretty heavy towards the end of the day. This big candle, this big red candle you see here was good for about 12 points or so once we got below that 50 period moving average. Here we are on a daily, though. You can see still sideways action. A lot of indecision down here by investors. More important to note that the 200 is still holding just fine. Path of least resistance, guys, is still to the downside. So yes, there's chop, yes, there's indecision, but you have to, in this case, be neutral to bearish on the markets. There's no reason to be anything but quite yet. Tons of overhead resistance to get through for the bulls if they're going to push this thing back up and give us a bounce. SPX on a weekly just started the week. We'll talk more about that on Thursday. VIX on a daily moving back up as well, up 10% today, staying in and around the red zone. So now we're finding a new happy medium on the VIX. Where's that? Right around the 35, 40-ish area. We've seen that now for the past 4 weeks. Fifth week started here, and you can see we're still contained in this 30 to 40 area now. Still fear in the markets. They're very unsure of where things are going next, and investors are showing it through the charge in the VIX. Apple on a 60-minute did get above this area here, made for a pretty good trade. Look where it ran. No way. Right to that overhead line we had drawn in there. Perfect test of it. Up and even a little bit higher, actually, I should say. The 265 area is where I would have been looking to take profits today. I did not trade Apple today. It made it about a buck higher before retreating, but you'll notice that it did not close above 265 and then, of course, came crashing back down. So now what are we looking at? Well, obviously, for me, it's pretty simple. I'm watching this blue line to hold as support on the way back down. But the trade I'd been looking for is now kind of over with, and that was a push above this blue line, back to 265. Now we're coming back down. I'm probably not trading this until we get back below 255 or above 265 in Apple. Here you can see the move to the upside, staying above the blue line, which ultimately, overall, is still bullish. If I break this down, I can maybe make a 1-2. This is maybe still in the process of a 3 up in Apple. A little early it's not, it's a little early to tell exactly where we're going to go, but this break here sure gives us a sign that at least it's trying to make these higher highs. You can see it getting above 265 right back here and up ever so slightly higher before being turned back down. Now this line here probably resides around, 261, 262 probably. Now let's call it 262.50, somewhere around in here for the bigger line of overhead resistance. But, for you swing traders, it's still safe or more safe to wait till we get above 265. Play it back to maybe this 272 area. From a weekly, it's only Tuesday. Notice how we are holding above the blue line. That'll be the one to watch going forward for you longer-term investors. FAS on a 60-minute also coming back down, breaking the blue line. Look how nicely it sat right on that blue 50. And then plop. Once it started to break down below this this little area down here, it was off to the races for the bears. Dragging it back down, maybe coming back to 22, who knows? Really hard to tell right now. Still an intraday trader's stock. Not good from a swing trader's perspective. Look at this sideways chop. Nothing going on here for a swing trader. Still good opportunities because it moves so fast for intraday traders. You just got to be on your toes to catch it. Of course, FAZ did the opposite now, getting up and over that $15 mark. Like I said, this was a much more clear chart for me to be trading. And that is, now we're above the blue line. We're above this little $15 mark, held perfectly all day long. Beautiful, beautiful hold of support. This is such a pretty chart now. And once we got that break up and above 15, that was an entry to hold long with a little stop down here below 1450, and or a break above the 20 or the 50 period moving average here gave you good opportunity to jump in, take a little bit of profits. From a daily standpoint, though, you can see it's also just chopping sideways in through here. Swing traders, beware. Stay with the day trade. I notice how the 20-day is holding beautifully so far. I love this. So if you want to get short this thing, you want it below 14 bucks before you look to go short FAZ. But for the time being, I'd continue to stay with the intraday trades because we've seen great movement in FAZ lately. All right, that should wrap it up for today. Guys, still, this is the only really bullish thing that I can give you for the time being, and that is we're retesting this blue line, and so far we're holding this blue line. I don't know if it's going to make it another day. It's anybody's guess at this point. You just want to be watching these overhead levels that we talked about, 10,300 to 10,500, and then some of the larger ones on the other indices, which I mentioned this week, and I won't go over all of them again just because of time. All right, have a great day trading tomorrow, and I'll be back with you tomorrow night. Bye.